Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market pushed to a fresh all-time high, but since then, for most of the overnight session, the sell side has been more active and dominant, and we're starting to see at least some short-term weakness come into the market. Now, our bigger picture and intermediate term bias continues to be bullish, and overall, we're still trading, of course, in a very bullish environment, but on the smaller time frame, we're starting to see some signs that sellers are starting to become more active, and that means that now the market could start to develop a new trading range, which means that the market doesn't necessarily have to push to yet another fresh all-time high on the day time frame today. So that is something that we will need to assess in real time. Heading into the open, on the downside, we have pre-market support at 33.5 to 35.5. That is the more aggressive area of support, but because we're in such a bullish environment, buyers can still be active there on first test. Now, if the market continues to test that zone, or if we're seeing sustained downside momentum in real time and some real weakness come into the market, then of course the pre-market support zone does not have to hold indefinitely, and it can break and lead to a test of 26.5 to 29, which is today's initial support zone, and that's a good spot for responsive buyers to be active. Where you take the trade within the zone is going to depend on how the market approaches it and what type of risk reward is available to us in real time. Below initial support, we have a naked VPOC at 25.5, an open gap at 23.75. Those are also levels where buyers can be active. And then 19.5 to 21.5 marks a range extreme. So it's unlikely that we would go all the way down to 19.5 to 21.5, but in the event that we did, that would mark a range extreme and could shut off the downside. So heading into the open today, we can still look for long setups, but we just have to start playing a little bit more defense at the aggressive areas of support. So what I mean by that is if you're going long at pre-market support, and let's say the market bounces up, but then starts to struggle, and you start to see signals indicating that the sellers are continuing to be active, then you don't necessarily have to continue holding that long setup from pre-market support. It might have been a good setup when you took it, but 15-20 minutes later, if the environment has changed, if the market has already provided a reaction off that zone, and now it continues to test that particular zone, then maybe it's not the best trade idea, and perhaps the market has to dip a little bit lower in order to stabilize and find a stronger group of buyers. So responsive buyers can be active at the pre-market support zone, but then we need to assess the quality of the move off of that zone to determine whether it's a trade that we really want to hold, or if it's one where you just want to take a quick profit because the market could just balance between pre-market support and either the pre-market resistance or initial resistance zone today. So on the upside, the pre-market resistance and initial resistance zones are areas where responsive sellers can be active, and we would need to see broad market strength and sustained upside momentum in order for the market to put in another breakout continuation move to fresh all-time highs. So that is the market context heading into today. Overall, the focus is still going to be more so on the long side, but depending on how the day sets up, we could even look for short setups today as long as we're getting good trade location on the short side. And ideally, if you are going to go short, you want to have more real-time signals supporting the short side. So you still want to be cautious on the short side because the buyers are overall much more dominant and the execution needs to be much more precise on taking shorts. But since the market is quite stretched and we could end up developing a trading range today, we're open to short setups. But I think the easier setups are still going to be on the long side at the predefined support zones. So those are the main ideas heading into the open. Let's see how the market responds to pre-market support and pre-market resistance. That'll help us establish our intraday bias, and we'll take it from there.